Take a look around, everything is up. But does a fairy tale last forever? You came here for the truth, so let me unveil that for you. I don't know what people are thinking today, but if you look at history, it tells you the same message over and over again. Nothing lasts forever. The first thing I want to talk about is the stock weakness. That's right, you heard me. The stock weakness. The second thing is the job situation. There's a lot going on today. I'll bring you some info on that. And the third thing is real estate. It's going berserk. There's no doubt about it. I'll bring you some stats. And there's really so much more. Let's go. Let's begin with this article out of the AP. It's talking about what had happened in the stock market. And you might be surprised by this information. So take a look. Even before Monday's swoon, the worst day for stocks in a couple months, the market was flashing concerning signals. Now, if you look at the actual price, which we'll talk about in a second, it's been up and up and up and up. So what are we talking about here? Chief among them were the sharp moves in the bond market that indicated worsening expectations for economic growth and inflation. Critics also noticed that dwindling number of stocks, this is the important one, a dwindling number of stocks was driving the broad market's rise towards more records. From June 1st to July 16th, the S&P climbed nearly 3% and set more than a dozen records along the way. During that span, 57% of the stocks in the S&P 500 fell. They lost an average of roughly 7%, mirroring the average gain of the stocks in the index that rose. So this is serious because when you look at the breadth, as they call it here, we'll talk about it in just a second, you don't see that strength there. Whenever there's that weakness, oftentimes we have a correction that follows. Not saying a crash, not saying a collapse, but oftentimes there is a correction. Morgan Stanley said basically the narrowing leadership in U.S. stock market, they're calling it the bad breadth. They say that this is a sign that the market's run is moving from the early days of its cycle to the middle. Banks, airlines, other industries depend on a strong economy to thrive were among the losers as doubts crept into the market that the economy could fulfill investors' lofty predictions. Okay, so we'll look at that. I'll go to the charts in just a second, but here's like a generic article that you're going to see. This is Wall Street Journal, but you'll see it on CNBC and Bloomberg and so on. They take any information and they spin it to be positive. It could literally be anything. If all stocks, 100% of them went down 100%, they would say, this is the best thing that's ever happened. The guy could be out of a job. Unemployment rate could be at 100%. They would say, this is fantastic. It's the greatest thing ever. I mean, it's pure and utter propaganda. Or, no, it can't. I was going to say ignorance, but it's not. Some choppiness is to be expected. The report from the Federal Reserve can continue to offer more monetary stimulus for longer. This is talking about, let me just step back a bit, talking about the job situation and what's been happening in the markets. And so the choppiness that we're getting here is good because that means the Federal Reserve has to continue to pump money in. That's literally what they're saying here. And I get it. I agree with that. But we got to be wise about this. Come on. Now look at this. You're seeing the S&P 500, like I showed you, it bounced off the 50-day moving average, doing this previously June 21st, doing it again roughly around July 20th, and now it is up quite a bit. If you look at the, some of these stocks here, if I pull it up really quickly, I didn't prepare that in advance, but Carnival Corporation, for instance. Look, yes, over the past couple of days, it has been up, but after peaking out somewhere around here, look at that number, 31, which would be June 8th. It has been in this downward trend. It's below its 50-day moving average at this time. And there are other stocks, airlines, and so on, which have kind of moved in the same direction. There is definite weakness here. You're looking at that in the technicals as well. Now, it has become, over the last few days, certainly it's got a much better look to it, but still fundamentally, we've got some serious problems, okay? So that was, I showed you Trading View, by the way, but you could see that on any different market analysis tool that you use. Look at this. This is coming from Morgan Stanley, okay? The percentage of stocks greater than the 50-day, falling fast. There's a couple in here that I want to show you. Percentage of the percentage of the S&P 500 stocks trading greater than the 50-day moving average. And you can see the direction right here. Yes, it has moved up a little bit, no doubt, but we're still much lower. And it looks like 48% approximately, okay? And this is always going to move around. It's always going to be volatile. You could see what happened during 2020, beginning of 2020. This definitely got pulled down. Equal weight SPX underperforming. So the S&P 500, if it wasn't just a small group of stocks at the top and it was equally weighted, this is how it would look. And you could see, of course, yeah, I mean, you could see for yourself, obviously, but this is the beginning of 2020. Then it had climbed up and we saw much stronger breadth, but it's changing, it's declining yet again. This is a good way to look at the market, not necessarily just in price, but the equal weighting, because it sort of takes away those few big winners, the Amazons and the Apples. Cyclicals, the defensives, you're seeing that breakdown dropping below the 200-day moving average. We don't know what's going to happen in the near future here, but certainly you've got to break it down a little bit further. Now, you know I love talking about garbage on this channel. I talk about fiat paper garbage. I talk about all kinds, in fact. But this is really garbage. $20,000 trash cans? San Francisco looks to roll out costly prototypes for pilot on street corners. The only reason I bring this to you has nothing really to do with these garbage cans, but the fact that your tax dollars are often going to waste. Where they are needed most, unfortunately, doesn't get put there. U.S. jobless claims show a surprise gain well above expectations. It's still at 419,000, as you can see right here, but the trend, clearly, the trend is down. I mean, you note that. So you had this big spike upward during the beginning of 2020, and largely it has been declining. And I expect that to be the direction over the next little while. The actual real true problems with the job market, we haven't seen anything yet. And this is the last one I'm going to talk about jobs for just a second here. It's an article that gets into several issues related to it, but just to note a couple points. Workers are still stalling the job search, and employers from healthcare providers to trucking companies are getting desperate. Staggering stat. The share of job postings that use the word hiring urgently has spiked over 50% since the start of 2021. They do get into a little bit more detail here and just showing you that they're offering some perks, bonuses, higher wages. This is just, it goes into more, don't have time. All I wanted to note the fact that this situation is continuing. There's more of a demand for a lot of these jobs, but people don't want to take them. People are choosing an alternate path. People are doing other things as well. And quite frankly, a lot of the positions are not getting filled, but it's unusual coming at the same time that, like I just showed you, is that you've got the jobless claims rising. So there's this very strange disparity that's occurring today. And we're going to talk more about that in future videos, but let's get into the Money GPS insights. Number 1, the economy needs more stimulus when the moratoriums end. This is an absolute fact that people don't want to believe. Number 2, accelerating prices. Price inflation will in fact slow growth. And number 3, devaluation of the currency will reduce your purchasing power. The ability for your dollars to buy stuff weakens every single day. Be prepared for higher coffee prices. There is no doubt about it. Take a look. Coffee futures breakout points to a $225 price target. While certain commodities have recently pulled back, like lumber, others have stayed the course. One such bullish commodity is coffee. Now, while you as an individual, you may not be buying coffee futures, you might be buying coffee to drink, you're going to be paying a higher price. Okay? Take a look at, I thought I had this chart pulled up. Let's look at this one here. coffee futures weekly chart, okay? It has accelerated right here, and it's just to give you an idea. This was below 100, currently above, let's say it's 165, and the expectation is that it will head above 200. What does that mean? It means you're going to be a higher price, okay? Whether it's coffee, whether it's chocolate, whether it's wheat, whether it's anything. These things are all rising. Cooking oils happens to be the one that I think is most affected by the price rises. But anyway, look at what the Federal Reserve is doing. Do they care about you? Of course not. They're buying mortgage-backed securities, $40 billion a month. There's no reason for that. And they're buying $80 billion of the treasuries. $8.24 trillion worth of garbage on their balance sheet. But let's go even further. This is what I do with this channel. I expand more and more and delve into the depths of every topic that I do. And this just shows you a little bit more the balance of the Fed, I should say the balance sheets of the Fed, BOJ, ECB, all put together. And as was noted here by this individual, 2008 looks like nothing. Look, I don't know if you could see it. It almost looks like a blip in comparison to what we are looking at today. Look, just a bump in the road. And at that time, everybody was outraged. The Congress were yelling and screaming at the Federal Reserve, asking them, what are you doing and when are you going to stop? Today, it's when can we have some more? I mean, it's crazy. Look at this. Palm Beach real estate is so hot. At least 22 homes have sold for $40 million plus. This is crazy. Hampton's home prices surge to a record as pickings get slimmer. So the chart at the bottom there is just showing you that inventory is slowing down. Prices keep going higher. Global real estate price index, you're looking at the percentage change year over year, going back higher than what we had in the previous real estate bubbles. If you go in for look at red, the red line, that's Canada. I mean, there's no bigger bubble than Canadian real estate. It's an absolute fact. And you could see going far beyond 2017, far beyond the real estate bubble of 2007, 2008. It's crazy. I mean, there's the prices, but you also got to factor in what's happening with interest rates being at rock bottom, being really the primary reason why we're seeing this. Canada household credit, residential mortgage loans, percentage change year over year. That's the red line. It's accelerating, okay? But then you look at the HPI benchmark price, percentage change year over year, in this 1 year, accelerating over 20%. 20% for real estate in a year. In some areas, it's actually 30%. And if you actually go down much further in some of the more sought after neighborhoods, where you have, the good schools and the nice environments and so on, you're talking 30+%. That's unsustainable. Another 2.2 million stimulus checks just went out, and it's a great reminder to fire taxes. These are benefits. There are benefits to filing a return with the IRS, even if you don't make enough money. So that's what the article is talking about. But essentially what we're looking at here is a stimulus package that needs to go out consistently, or else a stimulus check, I should say, or else people cannot pay their bills. So you look at the economy in the consumer sentiment and different factors. When the stimulus checks go out, that things are okay. When they start to dry up, you have a problem. Last but not least, just a quick note. I've talked about this many, many times before. I know I have many people out there who love precious metals. Take a look at this. Gold traders chat bragged about how easy it is to manipulate prices. Think about how crazy. By the way, this is from 2009. From 2009, they're just talking about it now. They're doing this every day. The most manipulated assets in the world are gold and silver. There is no doubt about that whatsoever. Every single week I see an article about what they have done and nothing ever happens. They give them a little tap on the wrist and off they go. Look, If you haven't joined up to the insiders, you've got to do it, because this is my way to get to you directly. I email you the video of the day 5 days a week, and that allows me to skip around the censorship, what they call lower authority, and that's my way to basically trick the algorithm into seeing that outside traffic, which they love. So I hope that you will get on. It's totally free, of course, themoneygps.com. If you haven't already, hit that thumbs up button. When you do, you're supporting me. Don't forget, you've got to subscribe to the channel. We want to get this thing off and on to 300,000 subscribers. Be one of those people. Hit that subscribe button, hit the bell, and you will be notified of my videos every single day. I'm doing videos all the time. I'm doing live videos as well, so check those out. If you haven't seen this video already, you want to take a look at it, it's right here. Click it and I'll see you there.